Okay, testing, testing, 1, 2, 3. Wow, it's so loud in the office. I have to turn that down, I guess. Nah. One of the things you got to get for your home office is 2 subwoofers. Because one is just so. So anyways, good morning, happy day. It is a day. The markets are open. I don't know what day it is. Guess it's a Thursday because yesterday was FOMC and day 2 is always Wednesday. So it must be a Thursday. So what are you thinking about? Oh, I wonder what the unemployment claims are going to be today. Well, they're going to be higher than expected. We know that because of retail sales, which was disappointing. So you have to read into that. So anyways, that's what I think. So welcome to Forex.Today. My name is Wayne McDonald. I'm a currency trader, and I love currency trading. And I specifically and especially like currency trading with you. You're good people. I like you in my life. Let's get on with it. It's all about the base, no treble. I'm bringing profits back. Hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but chicka, slim shady. 2 trailer park girls around the outside, round the outside. And Morena's pig dog is right on target. Yeah. We're gonna take a look at all that. We're hitting our targets. You know, in the 72-hour window we picked out 72 weeks ago. Well, not 72 weeks, but 42 weeks ago. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, what's going on? It is a Thursday. Very cool. So thank you for being here. YouTube, Twitch, and Facebook. Good coffee today. Ow. So what are we going to cover? Well, we're going to tap dance and tell each other we're awesome people and we got this figured out and we're better than the other 95% and we're going to feel really good about ourselves and then maybe get ready to get a butt whooped. Because whenever that happens, when you get it all figured out, you get schooled. So anyways, we're hitting some good targets. There's lots of good trends. There's a lot of good things going on. Very cool. So our job is to continue doing our job. Okay. Marina says, yes, I recall you saying you won't believe it at the time. So here's what I want to say about that. You know, these big Hail Mary calls that I make, 30, 40 weeks in advance. I want you to think it's not me. I want you to think that this is therefore learnable. Okay? That's what I want you to take away from it. That there's some process behind the colors on your charts that makes sense. That there's some sort of, there's pulleys and switches, and eventually the ball ends up exactly where you expect it to end up. Okay? So that you can, maybe I can help you through the process of getting it, but once you understand it, you'll say, oh, okay. Okay, oh, okay. That's cool. Okay, you're like, that's cool. So it's not any sort of level of genius or something. It's just experience. And the cool thing is I'm trying to share that with you. Now, a lot of people fight me on this, but for whatever reason, it's difficult. So anyways, if I can do that, then it's repeatable. If it's repeatable, then it's learnable. And I know you can do this, and that's why I'm here. I'd like to thank Traders Way for being a part of our community. You're a trader, so you're going to need a broker. Do you want one that cares about you and thinks about your success as being a key part of their success? Do you want a broker that actually executes your trades into the interbanking system and not B-book you and trade against you? Do you want one with that provides good income as well as low costs? Tradersway.com. Open up a demo account. First thing they're going to ask you is, hey, do you want an ECN account? That's hard dollar fees. Would you rather have a variable account or a fixed spread account? Those are soft dollar fees. It's all the same. Right now, I think right now the ECN fees are half price. Their way of supporting their trading community and customer base during the COVID crisis. So anyways, tradersway.com for your execution partner for your successful Forex trading business. Remember, they get it. If I can help you become a successful, profitable trader, and on top of that, maybe because of that, they earn your loyalty and respect, then you're going to be a customer for years and years and years to come. Now, just think of the business model. If that's the type of people you want to work with, tradersway.com. Please like, please subscribe, please leave comments on the recordings. And here we go. Technical and fundamental analysis. Wayne, do you occasionally assess M2 money supply between nations? And no, that's old school. It's very old school, and it's not done anymore. So back in the days, I'm talking Paul Volcker, right around that period of transitioning, there was a transition between Volcker and Greenspan, okay? So the Paul Volcker years, if the Fed raised or lowered interest rates, you found out about it in the market. There was no press conference, there was no announcement, there was no press release. They didn't tell you. You wouldn't even know if they had done something. You would just see the market pop and people would scramble like, oh my God, the Fed just did something, okay? And that's where you would assess money supply numerically like that. Like what is the M2, M1, M3, and you would analyze this. We don't do that anymore. It's just not necessary. Now, I have a theory that the Fed has no idea how much money is out there, so therefore they're not going to really pay much attention to, analyzing it that way. They don't know how much $100 bills are locked in, the homes of drug dealers in South America, right? Or diamond dealers in Africa. There's bags and bags and bags and bags and bags of money all over the world full of US $100 bills. And therefore, we don't actually know. So it's not really paid attention to, okay? So now what we do is we pay attention to things like interest rates and such, okay? So that regime that you're talking about is pretty old. But you can pay attention to it, but it's not what is the basis of these moves. Okay. So we'll go back to this. This is going back now to October. Down, 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 up, up. I taught you how to do this. Roll reversal into 382. 382, by the way, this big 382 predicts a 1618, and our number here is 14.5. So I hope one of the success points I've had this year in regarding to being a good coach to you is that you are now open-minded to planning your trades bigger. Yes, you're concerned about what's going to happen over the next 3 hours, but you're also paying attention to what might happen over the next 3 weeks, 3 months, okay? Maybe even 3 years. So this plan we did at the beginning of November targeted this number here. Okay? And then what I've been showing you week after week after week inside of this is that there's micro moves, right? Oh, this was supposed to be pink. Come on, pinky. Okay, there we go. Micro moves. Okay. 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 We call this fractal geometry. They're doing the same thing inside of different time frames. Okay? So we could look at it on a weekly basis, and you'll love this. This is a cell targeting here. This is a cell targeting here. This is a cell targeting here. And this is a cell targeting here. Cool. Next week, a cell targeting there. Okay? So based on this, let me ask you one question. And I think it's important that you actually type out your answer because you're going to actually access different parts of your brain and this will help you learn. Okay? So I want you to answer this. Okay? When or if or when price hits targets, weekly targets now, weekly, does price tend to revert to the mean, aka back to the moving averages? Is there what do you want to call this? Lower highs generated? Oops. Are there pullbacks? Let's say when you hit profit targets on a weekly basis, okay, do you most often see pullbacks? I want you to actually type out your answer. Even if you're like, Wayne, dude, I can see it. Well, please have the strength to reach out to your keyboard and click 3 keys. Chemical says not necessarily. You're going to really have a problem, Chemical. You're fighting, first of all. You must know you're fighting. Jordan says generally. See, these are not good answers. You need to be extremely binary. It does or it does not. You're disciplined or you're not disciplined. If you are wishy-washy, and maybe you're just born in a certain month or something like that, and you're always in between, you're going to have a tough time making decisions. So you'll have to be binary in your thought process, even if it's not natural. You're like, well, I could do anything here. Well, the point is you can do anything here, and if you can't make a decision, your results are going to be inconsistent because you're going to make inconsistent decisions. So I don't want you to say, well, it depends, or yeah, sometimes, or often, or dude, does it or does it not? Or maybe I could reframe the question. You'll say, Wayne, you didn't ask the right question. Okay, should you expect a pullback after hitting targets? Let's do that. When you hit targets, should you expect profit taking that creates a pullback? Yes or no? Should you expect it to? It can do whatever it wants. Maybe there's a potential for a million different things, but should you expect profit taking that takes a pullback? Yeah. So I apologize. I probably didn't ask the question well. Okay, but thank you for answering because then I double made my point, which is probably triple the education experience. So thank you for those that answered. Honestly, I do appreciate that. Okay. Okay. On Rand. There you go, Rand. Yeah, Joseph says it. Yes, I should. Which is an interesting way of saying it, right? Yeah. All right, cool. Okay, and then the trend prevails, doesn't it? One of the things that's interesting about Rand is you typically get 2 chances per week instead of 1. Okay. Okay. So, how do you predict the future now? Okay. Okay. This is the one that pays you hundreds and hundreds of percent per year in income. Plus, the real moneymaker is asset appreciation. Yeah, of course. Yeah. It's all about that. Okay. So if you go back in time, like for example, there's the Friday front run, and there's a Friday front run, This one's early, but you would have stayed in. Okay. Here's the Friday front run. So what do you think is going to happen tomorrow? Now, you got to be careful, though, because remember, as much as you start to believe in these technical analysis, this is all driven fundamentally. So let's move on to a different currency pair. Don't think about this right now. Yesterday, I told you to make a decision on euro dollar, and I wanted you to declare that you had a reason. You either took profit at the exact price you wanted, or you stayed in the risk because you expected a specific outcome. And I asked you to, essentially write it down of why you would stay in the euro dollar long, and B, when you expected to break it, it would break out, and C, what is your exit target? Like where are you going? If not yesterday, then when and why and where and at how much? Did anyone at least think about that seriously? How many people take the extra time in the day and try to absorb what I'm teaching? Okay. Well, on to stay for the stimulus. Okay, but I want you to document a lot more than that. So the example I gave is, yeah, there's probably going to be a stimulus now. Yes, it wasn't going to be announced tomorrow. Yes, today it'll probably be announced, but they'll probably be running all the way to midnight. And that tomorrow it needs to actually be written on, voted by Congress, seconded by the Senate, and get pushed all the way to the President of the United States by the end of the day. That was my theory. Okay? Remember, nothing that didn't exist before yesterday morning. Now, I still think there's a pretty good chance, well, if the media thinks it's definitely going to happen, I think it could go down where Friday, they still don't have it nailed down. Tomorrow. And it's midnight, they don't get there. So instead, they pass a bill to keep the government open until Monday, and they keep going through it. And it doesn't even get done till Sunday. That could happen too, which would be very disappointing for a market that's already priced everything in. So next week is what I'm saying is, next week is not the same as this week or that week or that week or that week, okay? You understand? So you can't just always blindly expect the same thing to happen over and over and over again. Okay? Yeah, Gary says no stimulus like no Brexit. Like you wouldn't believe the power of doing nothing that's embedded into our governments. Okay? Oh, yeah, so let's talk about the Fed. What did I say was likely to happen about the Fed? The market was expecting one thing, and the Fed was going to deliver another. Now, one of the things we talked about is something that the Fed would never admit, and that is the devaluation of the currency to essentially offset the cost of what they're doing, right? Did you guys get that question where they asked him about it and he basically confirmed that the lower dollar, he didn't say it that way, but I forget the language, but he actually said that it would benefit the government, right? It actually benefited the government. And so that's like a wink, wink, nudge, nudge. Probably a mistake on his part. Right? But he was doing his best not to answer. Did you guys notice that? He didn't answer anything except, hey, if the dollar weakens and that makes our debt cheap, well, then we didn't mean for that, but wink, wink, nudge, nudge, right? So yes, they didn't tell us anything specific. What we do know is they will continue buying bonds. They will, right? We don't really know where on the curve, but we do know all the way through the end of 2023, which again, over the course of this week and last week, I educated you on the output gap, or sorry, the productivity gap, and that's what the Fed is talking about. So did your ears perk up at all over some of the responses? things like when they say overshoot and you see it now, you're like, oh, well, you got potential GDP and actual GDP, and the productivity gap needs to fill, and then we get to and then we get the crossover, and then we have to overshoot, and then we're going to look for, right? Oh, and this would happen and that would happen, right? Okay. Well, the disinflation is really just negative real rates. Okay. Which is another way of saying, so here's what happens, right? Government, so let's do G. G releases stimulus. Okay. Okay, great. Where does the money come from? $1 trillion. Where is this going to come from? 900B. Where does this come from? Remember, the government had a budget in January, and it didn't say anything about trillions of dollars in stimulus. So where does the money come from? It's not in the government's budget, so it's not taxes. That would be in the budget. Stimulus was not in the budget. Remember, businesses and governments have budgets. They're declared and ratified early in the year, and they have a spending program for the whole year. This is not part of that. So how do they do it? The government doesn't, the Treasury prints money. Yes, that doesn't happen in a developed economy. Okay? You only do that, Joseph, when you can't do this other thing. Not printing presses. That's very third world. Third world countries do that because they can't do what they need to do, which is bad, but buy Bitcoin, right? They issue bonds. They borrow. Okay? They borrow. And the mechanism, right, for them to borrow is the bond market or treasury market. Specifically, it's treasuries. So I'll put that over top. Treasuries. The difference between a bond and a treasury is bonds are issued by companies. Treasuries are issued by governments. Okay? So they issue a stimulus, and then they do this by borrowing money, and the mechanism through that is issuing treasuries. And then what happens to the treasuries? Type in a question mark if you don't know. Who buys the treasuries? All right, Jim's got it. Okay, bond dealers. There's what, 12 bond dealers? So a bond dealer, no, that's not going to be the right color. I'll do it over here. Okay, so now bond dealers. So I'm teaching you how Wall Street works, by the way. There's only 12 of them. Bond dealers buy the treasuries from the government. So notice the bond dealer gives the government the money. The piece of paper gets transferred, right? The IOU from the government, the treasury, gets sent to the bond dealer. So the bond dealer gives the cash to the government, and the government gives it to you. Okay? So the bond dealer gives $600 to the government. Well, actually gives like $10,000 to the government. You get $600. Okay, whatever. So that's how that happens. What does the bond dealer do now? Okay. Now what? The bond dealer now sells the treasuries to investors, mostly large institutional investors. Investors. So they pick up the phone and they sell it to their clients. Okay? Now, for the bond dealer to make money, they buy it at less than face value. Okay? So they might buy a $100 bond for $99.3. Okay? So they make 70 cents on a $100 investment, but it's not a $100 investment, it's $1 trillion investment. Pretty good money if you look that up, because all they do is front run. So what if the government called you up and said, I'll sell you $900 billion worth of treasuries? Okay, $900 billion, you got to have some cash. $900 billion, but it only costs you $880 billion. Are you cool with that deal? Now, it wouldn't be that. It would be, $898 billion, let's say. $898 billion. So you buy, right? You instantly have equity. Your net worth has gone up by $2 billion. Okay? So then what you do is you sell it to investors and you collect your $2 billion and it moves to their balance sheet and you get your cash back plus the profit that you made. Now that it's investors' hands, okay, they own this asset, so their balance sheet went up on the asset side, but their cash went down. So their bond, right, on the balance sheet now, so you got assets and liabilities and then capital. And so to make this balance, your cash went down, but your bond holding went up by the same amount. And so as investors now, your balance sheet still balances. Okay? Because cash went down, bonds went up by the same amount, so nothing happened here. Okay? So investors are sitting on that. But now, these guys have $2 billion, more than they had when this whole thing started. You following me? What does a bond dealer do with the $2 billion that they just made in profit? Where do you keep $2 billion in cash? By the way, don't you want to be a bond dealer now? You front run the Fed every single day? How would you like someone to call you up? I want to give you $1 million asset for 900,000, right? Okay. No, invest? Nope. Market? Nope. It's profit. It's already done, guys. Buy more bonds? Maybe, but before they do that, where do you store the cash? The ones and zeros, where do they get stored? Spend it? No, companies don't spend. They invest. But before they do that, where does it actually sit? Where is the $2 billion located? On the floor? In a tree? Where does it reside? At the Fed? No, only 10% is parked at the Fed. In the bank account. I know I'm being very technical here, but yes, it sits in the bank account. Cool. Now, what do banks do with money? The bond dealer's bank. Now, the bond dealer may also be a bank, but it still sits in an account somewhere. What does the bank do with the $2 billion that's now inside that account? They lend it out. Thank you. So what happens when you borrow money? So now you go to JP Morgan bond dealer, makes $2 billion. The $2 billion gets put into JP Morgan, the bank. And now you go to JP Morgan and you're like, I'd like to borrow the money. What do you do with money you borrow? Well, an overnight loan would have more to do with liquidity than a true deposit and true loan. Okay. But you could do that, Jean-Guy, but I'm talking more, broadly. You don't pay back loans. I mean, you do over time. Okay. You spend it. Okay. So here's what happens. You go to BMW and they're like, oh, JP Morgan finances this thing. So you buy a car. Boom. Money spent. Now you owe them, but it doesn't matter. It got spent. Okay. Because money left one organization to another and now you're in debt, but the money transferred. Okay. So now the car dealer has money in their bank account. What does their bank do with the money? Lend it out. When you lend it out, people spend it. There's a reason why you borrowed money. Okay? Yes. And meanwhile, you're paying your workers and everybody has jobs and now they have the credit to go out and borrow more and all this kind of stuff. And it trickles down and eventually all this money hits the guy that is the car salesman at BMW. And he's got a job because people come into BMW to buy a car and sales are easy because the economy is good. JP Morgan financing. I know it's actually BMW financing, but let's say JP Morgan financing is giving cheap car loans so you can get a BMW for 1.9% financing. So you get that and therefore he makes his sales and he gets his commissions and he goes to Best Buy and buys a big screen TV because he had a kick-ass month and he puts it on the wall of his apartment and things are good and it keeps flowing. And so what you can do is you track all of this. You can track the dollar as it goes from one person to another person to another person. That's the velocity of money. So there's the quantity of money, which dictates the individual value of each of each dollar. But then the velocity in which it is spent is also important. Okay. We're not going to get into the velocity of money and all that kind of stuff, but it matters because the government borrows the money, sells treasuries, right? Bond dealers buy them and make money. The bond dealers sell them to the investors. Investors increase their assets, right? So now they have assets, but their cash now, what happened to their cash? Okay, this back to the bond dealer. Bond dealer puts it in their bank account, and all of a sudden it's car loans, it's mortgages, it's employee salaries, it's year-end bonuses for executives. It puts gas in the jet, okay? And someone's got to pump the gas. Someone needs to clean the windshield. Someone needs to bring your bag from the lobby to your room while you sit in the lounge and have a 21-year-old scotch with your 22-year-old friend. Okay? It all trickles down. The lesson here is you should be a bond dealer. I mean, honestly, in a time like this, how would you like guaranteed free money? Guaranteed by the government. Dear JP Morgan, please buy our fresh cut treasuries and sell them to all your customers at face value. And to make sure you do it and you're motivated, we'll actually guarantee you will make at least $2 billion every time we do this. Every time. We might call you up 3 or 4 or 5 times a month, but every time we give you a call, every time this phone rings, $2 billion in your pocket for doing what? Nothing. Because the interesting thing, guys, is what about the bond dealer's ability to sell them? That could be it, right? That could be a problem, right? How do you sell $1 trillion? Like, dude, you want to make money? Sell $1 trillion worth of real estate as a real estate agent. You collect 3% on that. Holy crap, for doing what? Well, that's the problem. You have to be able to sell $1 trillion worth of stuff, right? So check this out. The bid to cover ratio. You guys pay attention to this? The bid to cover ratio. And because it's bid over cover, it's a ratio. But I'll write it down anyways. Okay? This tells you that the bond dealer sold one bond and 25 other people were willing to buy it too. That you could have given them 25 trillion and they could have done it. There were 25 bidders for every winner. Like, they actually bid on it. So what happens is people bid. It's an auction. What are you willing to pay for this bond? Pretty cool, right? All right. Would you be willing to give me a little thumbs up thing? Would you click the likey button, please? Huh? Would you take the opportunity to do that, please? Okay, so I hope you gain value. I don't know if it's true, but I'm probably the only trading guru on YouTube with a master's degree from Harvard. I don't know if that's true or not, but it probably is true. So I hope I'm giving you something that matters. Okay. JMP says here, I'm doing a good job. Thank you. I appreciate that. I mean, I don't know if you don't tell me, right? Yeah, bond dealers. Roger wants to be a bond dealer. That's cool. Well, we are bond dealers in a sense. You may notice or have noticed, or one day I will help you notice, that what we do is heavily influenced, if not directly related to the bond market. Okay? You would work in the FIC department. Okay? Fixed income. What's fixed income? Outdoor sunscreen says, I'm not a guru, I'm poo-poo. And well, then click the thumbs down. Well, bonds, treasuries, bonds and treasuries, fixed income, right? That's the yield you collect. There's commodities. Okay, which is that one. So you got fixed income, commodities, and then currencies. Maybe they'll throw in crypto next, and it'll be FICCC. Okay? Cool. So that's what we do. We are essentially bond traders. So why do you collect a yield on your ZAR? Let's go back to this. Why do you collect this? Well, because what you're essentially doing is taking your US dollars and buying South African treasuries, South African government bonds. Okay? So you actually sent your money into the interbanking system to gobble up South African bond, treasuries, T-bills. And there's a yield, an interest payment attached to that. That's why it's fixed income. Okay? So two things happen. One, you collect the income from that T-bill, that South African treasury. It has a T, it's right there. For every $100, you're going to collect this amount. So that gets happened. Okay? Meanwhile, you're selling your dollar, so it weakens because everybody's selling the dollar. But quite a few people are demanding South African rand, which is pushing up the value of South African currency. Okay, so that benefits you, but you bought, let's say you bought this here. So you're not buying more, let's say, but other people are buying after you bought, and therefore the value of the rand keeps going up. The value of this is fixed. It's fixed income. Really, it's not quite fixed because the currencies change, but let's say you bought $100 worth of South African T-bills priced in rand. So the value, because of the rand is changing value, or the dollar is changing value. But if this on that day was $100 worth of South African rand T-bills, you're going to collect this percentage. Okay? And then, of course, you're leveraged, so you get 100 times that because you only put up $1 and loaned South Africa $100. So now you're like, dude, well, you're only making $6 a year. Yeah, on your $1. Plus the value of the rand has gone up, so you've made $12 in the value of the rand, because now you're going to sell it back. Your rand has gone up in value, and then when you cash out, you're going to sell those rand and give yourself dollars. So you might have 12 times more dollars, plus 6 times more dollars because of the income that you collected. Okay, cool. I'm asked here, Wayne, did I close my trades? So let's take a look. We'll do, what should I do? Market, I guess. And where are we? There's the Kiwi. There's the Kiwi. Okay. There we go. So now I can lock in $450 pips and 450 pips. Or I can lock in, you want to do that? 480 pips and 480 pips. How about that? Total right now, oops. So I have 550 and 550. So I guess just for psychological levels, let's just move it to 500 pips each. 500 pips. 500 pips. So to look at that, my internal rate of return, I've turned 200 pips into 1,000 pips, right? $200 into $1,000. So my internal rate of return right now is 500%. Ten years, 8.777. That's cool. But for various other reasons, there's costs associated with it. But you're certainly going to... By the way, did they raise? Did they raise? It seems higher than I remember it. Where do we sell euro dollar? Well, that's a timing issue more than anything. But here's what you need to learn, Sinan. Because you're asking the right questions, but you don't know technical analysis, because that's what technical analysis tells you. Okay? Now, as far as euro dollar, I don't want to sell it ever. Fundamentally speaking, I don't want to sell it. Now, that doesn't mean it won't come down. So, right, so you're asking good questions, but I feel like there's no direction in your question. And by the way, I'm not trying to belittle you. I'm trying to make a point. Like, why would you want to sell euro dollar? Can you answer that? A lot of people say, well, look how high it is. Or, Wayne, you said seasonality. Yeah, well, seasonality, but I never said I would sell it. What I said is I will only buy it for the next 5 years. So only buying it is what I said. So where do we sell? Well, I'm not going to sell it. But now the next one would be, right? Okay. Yeah, I thought they were more accommodative, but I don't remember the 10-year being that much. Interesting. So anyways, could there be down in January and February? Yes. Almost certainly. Okay. So now the next thing is going to Sinan's question. What price would we expect that thing to kind of happen, right? Well, that's luckily we have technical analysis. So it's not a question. It's only a question if you don't know technical analysis, right? So if I do like position trading bullish, we already know, and I told you weeks ago, 124.50, right? 124.44. Well, holy schnicker, we're right there right now. This is the best price you could possibly expect for 2021. Does it mean it can go higher? Oh, for sure. But you would not have expected that or should not expect that. The only thing now is whether you're going to bet on a stimulus tomorrow and you believe that stimulus will take this higher. Well, that's your judgment call. But what we know, what analysis tells us, okay, what analysis says is this is out. Okay? That is the best projected price. Okay? And by the way, if you got out yesterday in here, you did the right thing. Absolutely 100%. And one of the things you need to do as a trader is develop the habit of never looking back. Okay? 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 You did what you decided to do, and I applaud you for that. Okay? That's right. Greg brings up a good point. The Europeans hate this strong euro, but it's not the Europeans making it happen. This is all about the USD. So the story you're going to hear in 2021 is everyone else bitching about the weak dollar. Okay? AJ says, so everything will crash until December 21st. I've never said that. Not even close. I don't even use language like that. Okay? Okay? I don't speak that way. That's like, the sky is falling. The sky is falling. Sorry, dude. Okay? But should you expect some profit taking here? Yes. Is there a potential now for unusual activity above the best expected price? Yes. And it's only stimulus. Okay? But keep in mind that I think a lot of this last move in the last 24 hours to get to this price is based on the assumption of stimulus. You see what I mean? So they can come to an agreement and then agree to not give everybody $600. Boom. Dead. Okay? What did we talk about yesterday? I asked you what your thoughts were. plan A, plan B, and plan C. Plan B, I believe, was the breakout pullback out of position on the January open. JM4. Stimulus takes us out of position. We open up January hot, and that sets up the giant counter trend. And does that mean you can sell euro dollar? Yeah. Does it mean I will? Maybe. But what does it really mean? I'm going to buy it low. So I'm already looking forward in the short term, forward in the medium term, forward in the long term. Okay? Well, typically, if January comes down, by the way, often it can happen in February, but usually January, and it'll do this. Is probably what I'm thinking. Okay? So you have to put this on a chart. Week 1, week 2, week 3, week 4, week 5, week 6, week 7, week 8. So January, February, so March, we're back to where we are today. Or, no, not today, early January. So we're right. We would need to do this now. Okay. So you might look to sell euro dollar, which is totally fine. I'm looking to buy euro dollar on the way down. Okay. What do you think? Smell like a plan? Time for coffee. BRB. Yeah, boy! Oh, you joined FX Bootcamp? Session blocks for the various sessions. What are you in the live course or in fxbootcamp.com? Unless you're talking about there must be one on yeah, there is one on that, right? Well, that I mean I don't know. You'll have to figure it out. All right. Yeah, the session. So what course is that in? Is that the Taking Control course or a different one? It's not. That's one with Ryan, I believe, right? Well, I'm sure he gives detailed. So, like, I don't know if you're using the right platform or anything, but it should work for everybody, so. Session block indicator for various sessions. Yeah, Taking Control. All right. So let's continue going around the world. Okay, here's the best expected bullish price to buy. This is the conservative target. Same thing with the week before. This is the best price you could expect to buy West Texas Intermediate crude, and this was the conservative target. But remember, some people think pivot points are random, even though there's almost to the penny accuracy. Some people just don't believe. Don't believe the hype is unequal. Can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunk. Sorry, I can't help it. All right, best expected price for gold this week. Conservative target for this week. Mahai said, I made a mistake. I said to myself that I would not trade until the... What? Why would you say that? Oh, you mean you exited a week ago or something? Interesting, Mahai. You said to yourself, we should not trade until the 3rd. Huh. Yeah, well, I get what you're saying. It's not a mistake, but also I want you to realize, as a professional trader, people will pay you money to A, make the decision. That's what an analyst does. So you can say, well, research shows this is what you should do with your money. Okay? And that's worth about 30 bucks. Okay, for $30,000 a year, someone will actually want you to execute that. So your job now is to always stay ready, willing, and able. But if you made the decision to walk away, then you need to walk away. Okay, there's no mistake. You decided. The mistake is not deciding. Okay, so if you decided you cashed out at what you considered the reasonable top, and you're deciding to walk away because of an increase in risk, then that was your decision, and you should do it. Right? So that's how you have to deal with that. So it's not a mistake. You analyze the risk, and you made a decision. That's your strategy. Not a mistake. Okay? Cool. La-di-da-di-da. So there's the gold. The best you can hope for is 19. Okay? And then next week, 1936. So, like, for example, if you did it this week and you got to the R3, you're done for the year, most likely, because you already got next week's profit too. So you're done. You should be super happy if you get that. Okay. So another way you can analyze where this top is going to be is it's a form of measuring price action. Okay. This is a 50%. Okay. That gets you to 382. If you think it's a 382, then it gets you to 1618. So I think this is a 50%. What do you think? Let me expand this out so it's easier to see, or maybe zoom in. Okay, cool. Okay, all right, you see this? I think it's exactly precisely 50%. So in my book, 50% projects to 138.2%. Okay? Can anybody confirm that? Right? You know this? Okay? Cool. So now we're using a completely different methodology that says you should get out at 1920, and the other methodology says you should get out at 1921. So they're two different methodologies completely, and they say the same thing. Okay? Pivots say get out at 19. But remember, last week was a dud, so it's only looking at last week. So if you're expecting a breakout, you'd have to go a little higher. So I think they're all kind of saying the same thing. You can see the pivots, right? So if you're breaking out of an inside week, you're going to go to the 3 and not the 2, the R3 versus R2. Okay? But whatever. So there's your Goldie. Kiwi, I got knocked out last night. 400 pips, I think. So I got knocked out here. Isn't that beautiful? Okay. Whatever. Shiar Salim says sold out of boredom. That's terrible. You'll never be professional acting that way. Think about it that way. Professionals just would not do that. So you're doing yourself a disservice. Okay? So I know that was a bit of a slap and a public humiliation. But once in a while, the teacher needs to make the kid come to the front of the class. Right? In this case, trading out of boredom, stop it. Okay. So let's take a look at the confluence. I've been out of this one now for 2 weeks? All right. Okay. And by the way, it's not that you can't sell here. You don't sell like that, though. I mean, it depends on how you do this. Like, even if you're scalping, you should expect this. Okay? So I'm not sure how you threw this down, but we can dissect it if you want. But when you say you did it out of boredom, then, it's just you're asking for the pain. Okay? So it depends on how you threw this down. But it's not implausible, but it's just very short term. But what you're doing is you're stop hunting. Okay? So you'll need to know, right? Okay? No, I don't think there was anything to hide. Okay. Do you see the trades there? So if you took one of those trades, I would leave the stop. And I would also assume you're going to break even. But if you get this right, you should pick up hundreds of pips. If you're just doing it to pick up the 20 or 30 pips, you're doing yourself a disservice. You're just, I don't know. If that is a trade you made, it's either overly aggressive gambling. Now you're gambling with strategy, right? You're counting the cards, you're doing the best you can. Fine. So you got technique. I didn't say it was stupid. But if you get this right, I mean, you might as well collect the full lottery ticket, right? It's like having 6 out of the 7 numbers, and they're like, okay, you either take the $10,000 right now, or if we reveal the next number and it's a 7, you can have 10 million. What do you do? You have a 100% chance of 10,000 or a 10% chance of 10 million. What do you do? And what you're saying here is, I'll take the 10,000. Okay, well then you need 10,000. You see what I mean? You need the 10,000. You're like, oh my God, 10,000 is a lot of money, right? And you'll take it. And you're like, I'm guaranteed that and I'll take it. For other people, they're like, $10,000 would make a difference for anything. But 10 million would, so yeah, I'll take the 1 out of 10 chance. Because 10 million would matter. So I'm trying to ask you, like, you took risk. And it's already bad odds, but now you got 6 of the 7 numbers. So I would say go for the 10 million, but you might need the 10,000. And so you make the decision that's given to you. There isn't a right decision. But in my opinion, if you're going to take a trade like this, you should bet on the full Monty counter trend. But I think what will have to happen first is a double top, a drop, okay, a monkeying around, and then what? A double top of a double top, and then the drop. So, right, you're here. Oops, you're here, and I think what probably will happen is you'll be at this number 4 more times, or 3 more times. Or what I would expect is something similar but different. I still think there will be a complete double top. That's, by the way, but when I say I think, what I should be saying is this is what it tells me. This chart is telling me if it's coming down, it will double top first. Okay? And so the next scenario would be it falls here and you get this. And there you get the double top, drop, lower high. So it's got to consolidate for a week or two, like Christmas week. And then it's going to open hard to the downside last week or first week of next year. So in that case, if that's what you're planning, you got plan A is the big double top on the daily, or you get the lower high, lower low scenario on the daily. It's one of those trades. Meanwhile, you're in right at the top, and I'm like, really? Okay, I get it. You're in here, but there's a lot of time for this to come together. You see? So if you took the first drop, like first of all, I wouldn't want to make 30 pips on a trade. I would screw up my averages. Pennies. Okay? So I wouldn't want that. So I would want A or B. So I would put my stop and say, well, I took a long shot. I took a Hail Mary. Someone might catch this, right? If you know what a Hail Mary is in football. Someone might catch this and we might win the game. We're all champions. So I'm going to take the shot. I'm going to push for the end zone. But it's highly unlikely. And it's in fact risky. So you need to manage the risk well. But if you're in it, you should be in it to win it. right? You don't take a Hail Mary so that you can set up a field goal. You got to score. Okay? Sedan says, what's your risk-reward ratio like? Typically 10 to 1. Right? So I just showed you guys earlier, I risked $200 and I'm up $1,000. Okay? 1,100 or something, or $1,000. So that's a 5x, right? Which means my internal rate of return for every dollar invested is 500%. Okay? But I never risked more than 33 pips. So you could argue for risking 33 pips, I'm up 500 per trade. And you could also argue I'm up 1,000, but I didn't take the trades. Remember, there's 2 trades. I don't think I took them the same day. So I took one on one day and one on the next day. So I never risked at any one time more than 33 pips, but I'm up 1,000. Okay? So what's my risk-reward ratio now? I never risked more than 33. I had to stop. There was no risk beyond that. See, I scalp into my spot. I spot in my swing. I swing into my carry, or into my position, and I try to position to carry. So what is my actual risk-reward ratio? Who gives a crap? Okay? That stuff matters only on the short run when you're risking 33 pips to make 33 pips. Then it matters. Because what most people do is they risk 330 pips to make 33 pips. And now that matters. You're like, dude, you're risking way too much for too little. But that's not relevant information for a professional trader. Like, professional traders don't do stupid things like that. It doesn't exist in the real world. In the professional world, it doesn't exist. It's not what people do. So imagine you're a bond desk dealer at JP Morgan. And the Fed calls you up and like, I'd like to give you $2 billion in profit today. Would you like to work with me? Yes. Yes, I would. Right? There's none of this kind of concept of weird risk-reward ratios and win percentages. Like, Wayne, do you win 66% of your trades or only 62% of your trades? Why do you care? It doesn't matter if you're trading properly. You could have, right? So in the swing trading course and in the day trading course, I think specifically the day trading course, I teach people that you can lose 66% of the time. But if you trade properly, you'll be profitable. Actually, you'll be break even. Right? So another way of doing it is you can lose 66% of the time and lose no money. So who gives a crap about your winning percentage? I mean, that's the idea. Like I'm trying to show you, if you know how to trade properly, it's not even the right question. It's not even the right statistic to be tracking. It's irrelevant. It's meaningless unless your trades are worthless. Then you gotta have a lot of winning trades to create value. But then you're going to get sick of all that hard work of being stuck, maybe if you're lucky, at break even, or you're profitable, boom, you're losing money. Then you're profitable for 3 weeks, boom, you're losing money. And you get frustrated with all this, so what do? You jack up your leverage, you jack up your lot size, and you go bankrupt with a 66% win rate. How many people here have had 66% win rates, but have not been satisfied with the amount of money they're making? I'm sure there's lots of people here that have been there like, dude, 2/3 of the time, but I'm still break even. Well, I can show you if you trade properly, you can lose 2/3 of the time and still be break even. So what if, just bear with me, that in mind, okay? Some people are right 66% of the time and still don't make any money. And then I'm saying if you know how to trade properly, you could be wrong 66% of the time and still not lose any money. So that if I can get you to trade properly, knowing those kind of the statistics of it, what if you didn't lose 66% of the time? What if you only lost 50% of the time? You'd be profitable. So now you get to the point, if I can teach you how to trade properly, can you be better than 50-50? Now 50-50 is profitable. It's not a lot of money, but you're not losing money. But now you're trading properly. So over the course of 2 or 3 or 4 or 5 years, can I get you to be better than 50-50 winners and losers? What if you can be right now 66% of the time trading properly? Right? What we say in the day trading course is 66% of the time, it works every time. See the binary thought process? I'm right when I pull the trigger. I know it because I did the analysis. Except for those times it doesn't work out. But then it's not my fault because the market did something stupid. It works out because I know I'm right. And if it doesn't work out, it's the market's fault. Now look at the attitude. Look at the psychology going on here. I've done the work. I'm hardcore disciplined. I've done the work. I know I am right. And if I lose money, it's not my damn fault because some other market participant did something stupid. Well, that gets me through life. That gets me through the day. That gives me the confidence to pull the trigger. Okay? But if you throw down a trade because you're bored, oh my God, you and me, we're not even on the same planet. And you may make money, and you probably will make money, and it'll be great. And you'll have 66% winners that are 20, 30, 40 pips each. And then you'll have a couple of losers that are 100, and it's all gone. Anyways, but I do wish you best of luck. Now, does this mean you cannot short-term trade? I think you can. And I think you should. And I think you should develop the skill. But a lot of people start with short-term only first, and they never get the big picture. And I think without the big picture, it's going to, it's just the wrong train of thought first. I'd rather teach you how to read a map with a compass first before we go into the woods. Okay? You see what I mean? Because once you know, you can go anywhere in the woods you want. You got a compass, you got a map, and you got knowledge and skill. You can do the other way, like let's get lost first, and then let's figure out where we are with the map and compass. But I think that's significantly more difficult because you don't know where on the map you are. So you got to start figuring that out. All right, where are the major landmarks? How far? There was a river, right? And then there was a road, and there was railroad tracks. So where are those things on the map? Okay, we must be over in somewhere in these grids. Okay, and it's just longer and slower and inaccurate, and it could, right? So I would start big and then work small. So it wasn't until about my, 8th year of trading that I focused on the 1-minute chart. And I did fairly well in my opinion because I already knew what I wanted to do, why I wanted to do it, and where I wanted to do it, and how to do it. So I could trade on a 1-minute chart. Okay? Okay? Do you think Biden will have an effect on the dollar? Here's how Biden can have the effect on the dollar. He decides to go into a trade war and close the borders. That would strengthen the dollar. So Herman, what do you think the chances of that happening based on what you know about Biden and your deep research into politics? Which currency pair is this? It's right here, bro. Says it here, says it here, says it here, and it says it here. Herman? By the way, Sanan, I searched on Google the major hotels in Basra, and I Google Earthed it, and I'm like, where is it relative to the river and stuff. So anyways, yeah, so not likely. So then what is likely? The dollar will continue to weaken. Why? Well, that the Fed decides that, not the government. The government can affect it, and the government's policy and change in policy could impact. But what creates the dollar strength or weakness? That's generally central banking policy. And that was set in April. So that's that. So I said on the 11th of April or 13th of April, I'm short the US dollar for the next 5 years. Done. Now, could Biden change that? Yeah, but probably not. But I know when it'll happen, because he'll have to do something which is considered an exogenous shock or a black swan. Those are the two things that will change my fundamental bias, is an exogenous shock or black swan. Other than that, I'm buying every dip. Okay? But see, I'm binary in my thought process, because if you were my client and you're like, well, Wayne, I got $100 million deal on the line, and the duration of this project is going to be the next 2 or 3 years. What should I do? The first thing I'll say is, well, give me $50,000. And the second thing I'll do is I'll explain what I think and why I think it. Okay? We've already done the stimulus. That was so an hour ago. Actually, that was so Tuesday. I outlined that 2 days ago. So you'll have to watch the recording. Make sure when you watch the recording, you do the thumbs up. Huh? Make sure you likey. Okay, let's go into here. This is another one we're setting up for income-based trading. Okay. Here's the top of the shoe. Okay. And we're in the sell zone again. Etoni. We're in the sell zone. Do 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 do. All right, so we'll continue going through a few more currencies and a few more commodities. Okay, stock market's opening in a few minutes, but let me go through a few more. If you take an opportunity to request something, I will do my best to cover it. Just type it in the chat. So let's go. I can't tell what's true or dreams. We did Rand. Oh, let's do Aussie. Yeah, Aussie's a disappointing one. What and where did I do it? So remember, I think I longed it on Sunday. Or was it last week? Anyways, I was in this and I got knocked out. I think I locked in 100 pips or something. So if I got in here, 73.5, 74.5. Not sure where I got out. But anyways, I only picked up $100 on this. Shorter term trade. And then, of course, I'm not sure why I moved my stop. I don't take profit. unless we're at R2s and stuff like that, right? Like I don't take profit. Most of the time I'm letting it run. I don't remember why. Obviously it wasn't on this time frame. So let's change this one now to a weekly. So I'm going to go to swing trading, bullish bias. I'm going to look at it this way. I wonder if I had it last week. I must have bought it here and jam my stop. That makes sense. I must have bought it here and then we were up here and so what is this? 74, 75, maybe. Wayne, what is the swing trading group? Yes, we meet at 2 p.m. 2 p.m. my group meets in the Zoom room, accessible by your back office, your account back office. Okay. The price action pivots are ready. The programmers are not doing the job now. And now I'm behind because we do have someone that can do it, and I've been busy. What? Been busy. So anyways, yes, so this is telling us 77 is a pretty good number to exit. Well, Herman, it would not be very long because people will spend it. Okay? But that's not impacting the dollar. Why would stimulus impact the dollar? Well, it would create short-term macroeconomic activity in the United States. Well, I should say microeconomic activity in the United States. And rich people probably won't spend it. Poor people will immediately spend it. So it comes down to the degree of, if and when American citizens and legal residents get their $600. What will they do with it? If they buy Weber barbecues, the dollar will not be impacted because Weber is made in the United States. If they may buy, what else is made in the United States? I don't know. If they buy stuff, they go to a restaurant and they have a luxurious meal. Nothing happens to the dollar. If they go to the liquor store and buy booze, nothing will happen to the US dollar. Okay? Now, if they buy Samsung TVs or Vizio TVs, well, if they buy Samsung, the dollar weakens and the money gets converted into South Korean currency, won. If they buy Vizio instead, it gets converted into renminbi. Okay, cool. If they take their $600 stimulus check and they put it as a down payment to their BMW, on their brand new BMW, then the euro goes up and the dollar goes down. So it should, Herman, weaken the dollar. But it's dependent on if people spend it and what they spend it on. Now, anything at Walmart and anything at Amazon.com is probably made across the US border in some other country. As an American would say, some other no, I won't even say it. God-forsaken country. The dollar should weaken if we buy stuff. Another way of saying it is a stimulus. So let's break this down. I want to make sure you're following all this. GDP equals, you guys getting good at this yet? C plus I plus G plus exports minus imports. Okay? Good. It's X minus M because it's net. Okay, not gross. All right, cool. So G goes up if imports go up more than exports, which we would in this case, then the US dollar will weaken. Okay? Now, government spending gets converted, right? So the government spends 1 trillion, let's just say 1T, but of that, what does the 600 represent? Let's say 300B go to consumers, and of that, 200B is products made outside the United States. Then M goes up by 200B, the US dollar weakens, and that's how you break down the cash flow through consumption, investment, government spending, and net exports. Okay. Yes, and on Bitcoin. Bitty, 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 can't you see? Okay, I want to bring up now Bitcoin because I want to make a point. Do it here. Okay, I want to make a point. Now people are talking about it because it's at 23. It's not interesting anymore because it has happened. Mahai, be careful. Don't say things like that. You're programming your brain in ways that will not be helpful. Just don't even say it. I wish I hadn't even read it. Okay? It's not the right thought process. Okay. So let's get back to this. Where we are now is irrelevant. If you were buying it earlier because of setups, then you earned it and you made money already. You understand that? So let's do what we know. Okay? We knew back in November, okay, here's November, that this was the we knew back then, let me start this over, that this was the December buy zone. Okay? So because of your analysis of Bitcoin, you bought it at the end of November. Now it's interesting, right? Yeah, because you're probably taking profit, or you jammed your stop and you're going to let this run because of your belief system for Bitcoin. But we also know that this is the conservative target for the month, and this is the aggressive target for the month. So now that it's done it, now people want to talk about it. But that's just amateur to me. Like, who gives a crap now? Oh, well, Bitcoin went through 20,000. Now it's above 20,000. Who cares, dude? Did you buy it in November or not? If you did, congratulations. If you didn't, it's irrelevant. This stuff's not complicated. If you believed in Bitcoin here, okay? If you believed in Bitcoin there, now you have it here, and you're making money, and because you made good decisions, you're getting paid. Now that it's done it, it's irrelevant, except for people that want to piss around with this crap. It's like, it's just stupid to care now. Okay? This was smart. This is stupid. Okay? So that's the only point I want to make here. Like, you can see all the chances I have lined up for you to get in, and you either did or it's irrelevant. Like, who cares? What do you do now? Pfft. What do you mean, what do you do now? You want to be brave here, but you won't be brave here. It's just, it's crazy to me that this now has happened and now people are interested. It's just the wrong mindset. You understand that? It's just crazy. It frightens me, in fact. I'm like, oh my God. Right? Oh my God. Seriously, now it's got your attention. Because now you still don't know where it's going to go. If you didn't know it was going to go up here, then you still don't know anything about Bitcoin. Okay? Do you understand that? It's a pattern. Well, but it's over. What I mean is your pattern probably indicates that it's over. But a lot of people are going to show up now and trade Bitcoin now because they read about it in a blog. Okay. Okay. So when can you dump it? Well, that means you're buying US dollar. So why don't you ask the question differently? Why don't you ask, when do you think the US dollar will strengthen? Because it's not likely to happen until that scenario happens. Because now you're asking me, Wayne, when will risk be off? But once again, I've already answered that question 100 times. Okay. In many different ways, I've already answered that question. So if you're not following along, you either need to buy education, right? Or pay better attention. That I believe there's macroeconomic forces here that totally make sense financially. Like, I can see someone, with a visor and glasses over a bright light, smoking a cigarette, calculating the numbers on their adding machine, tap, 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 and they say dollar weakens or dollar strengthens. Like, if you analyze what's happening, all of this makes sense. None of this is random. So like I said here, if you did your job and you analyzed the market properly and you took in proper consideration and you said, I think Bitcoin's going to go up because at the very least the dollar's going to fall. So you bought it here. Now you got paid. That's what I'm trying to say. The critical thinking that you've done based on the research that you've already done, you made a conclusion. Do you remember? I'm going back to the intellectual definition. That you put in deep thought process based on your research, right? Critical thinking of your research. And what did you develop? A solution. You're not intellectual if all you do is come up with an idea. It has to develop a solution. You do research, there's critical thinking about the research, and the output is a solution, a plan, an execution. You bought it here because, 17 is a pretty obvious buy, or 18 is a pretty obvious buy. And now that we're at 23, your stops are at break even at the very least, or you might be exiting, whatever. But the thing is, you put all this in. To care now is simply no critical thinking, no research, and no solution. It lacks complete intellectual thought. It's pure emotional reaction. And I don't think that's healthy for your trading. So that's why I want to beat that down like a dirty dog, like a dead horse. Make sure you put yourself in check. Okay? Which one do you want to be? The emotional reactor? You react emotionally to everything after the fact? Or do you put in an intellectual process of critically thinking about research you've done and developing a plan of action, a solution? And you bought it here, and now we're up here and you're getting paid because you created value through your intellectual process. Or you react like a cat. What was that? That was that Bitcoin over there. Right? Who do you want to be? Okay. Was that too mean? Did I hit you guys too hard? I want to make an emotional impact. I hope that wasn't too much of a bitch slap, but it meant to be one. Squirrel! Now I'm choking on my own spit. Squirrel! All right. Third world country, no job. My only hope is trading. That's the best place to be. You should have, right? You should have nothing better to do than completely focus. See, here's what happens in a first world country. Someone says, yeah, I know Forex is a scam, but it looks really cool. I think I'll pop $5,000 in an account. And if it blows up, then, whatever, I'll go take an options trading course and I'll do that for a while. Okay? And that's dangerous. Because what you just said is you totally plan on losing $5,000 and it's okay. Do you ever study champions? There's never a situation where losing is okay. Change the variables a little bit. Oh yeah, it was very likely for you to lose. It's okay. No, it's not okay. Right? It's never okay. So if you're in a situation where you cannot lose, then hopefully you do it right. Okay? How do you become the best of anything? You work harder and do more of the right things than other people are ready, willing, and able to do. Regardless of who you are, regardless of where you come from, regardless of your lifestyle, your choices, all these different things, it doesn't even matter. So one of my favorite news stories now is Dennis Rodman, known to be the best rebounder in the NBA history. But he's also the big weirdo with the weird hair, weird lifestyle, pins through his nose, tattoos over his body, weird hair colors, right? And he got headlines during the period when he played on the best basketball team to ever be assembled. Okay? 6 times in 7 years they won the championship. Dude, you're lucky to win once in your lifetime. Okay? So, why is he on the team? Because he's that kind of person. Yes, he might seem different, but the similarity of him with the rest of the team, and of course, other champions that have lived, right, in any sports or any other arena, it could be business, right? He worked harder than anybody. He worked harder than the hardest working people. Okay? And he never had excuses. So imagine Dennis Rodman is in the gym, he's wearing combat boots, tight jeans and a Bill Cosby sweater. And he's still on the treadmill on a 45-degree angle, running until he's physically going to pass out. Oh, but he didn't have the right workout clothes. Oh, he didn't have his running shoes. Oh, it didn't matter. It was time. And that's what he had at the time, so that's what he did. And it's amazing. Right? So if you cannot lose, then you should focus on winning, not jacking up lot sizes, not jacking up leverage, not taking a bunch of pissy little stupid, worthless, no plan trades. Instead, you're focused purely on the process of planning through research, critically thinking about it, coming up with a strategy, and then executing it flawlessly. And by the way, if you can do that, you can build wealth, you can build income, you could probably get yourself out of your third world country if that's what you want to do, or you can have a positive impact on your community in your third world country. There's probably not a better place to be rich. Okay? For example, you could probably buy a nice house for $2 million US in your community where there's no work, there's no job, right? All you got is Forex. In California, you can't buy a nice house for $2 million. You can buy a house for $2 million, but it's probably not that nice. Tiny, poorly made, it's no insulation, electricity, electrical wiring from the 1960s and 70s. $2 million for a 3-bedroom house in a school, in your neighborhood has a school that is not good, right? So anyways, Wayne, to trade reasonably with one lot, you need 300. It's not that. I don't want you to focus on that. Don't say you have to have 300 capital. You know what the most important thing is? Once you know how to trade properly, of course. Let's say as a professional trader where you make money. You make money all right? Every month is a profitable month. Some are great months, some are mediocre months, but you make money. Okay? You know what the next most important thing is? Time. Compound interest. It's the beginning of my book. Talks about that. Okay? So if your year looks like this. Oops, I got to do this in white now. Let's do this. Let's go through your year. January, February, March, April, May, June, July, August, September, October, November, December. Here's your month. 2, 3, 1, 4, 6, 1, 1, 2, 7, 4, 8, 3. Okay? You can be successful. Forever, never, 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 never. That's it. So Lotto Club says in South Africa you can buy a town with that amount. Then I think you should. And you should make it a beautiful town. So I'm saying, why would you leave South Africa, come to the United States and lead a mediocre life? Well, you're like, well, wait, a mediocre life in America might be 10 times better than South Africa. Maybe. I don't know if that's true. But you could also stay there and make a difference with your money. See, money is wonderful because it's worthless unless you deploy it. And if you deploy it in good ways, you can have a huge impact. Okay? I worked in a nonprofit or industry for like 5 years. And I understand what can be done. But it sucks to be a nonprofit with no money. Okay? You understand that? You can't do much without money. So you might as well figure out the money problem first and then work on the world. A lot of people say, oh, well, I want to work with a nonprofit because money is evil. So I'm going to, go to Darfur and plant things, teach people stuff. Like, dude, they don't need you, dude. They need money. Okay? Darfur doesn't need you. It needs money. Okay. So, anyways, we'll go back to this. If you can make millions of dollars of trading Forex, make a beautiful town in South Africa. Okay? So David Pigler, when he worked for me, he'd go back to South Africa with a suitcase full of flip-flops. So he'd go to the store and he'd buy like 100 pairs of flip-flops. And he'd take it back to South Africa and he'd just give them to kids. What a beautiful human being, huh? He'd just go and give everybody flip-flops. Okay? You got no money, you got no car, you got no flip-flops, and there you are. Okay? So if you can do this, the sky is the absolute limit. You can do this over and over and over again. Now, the trick to being a trader is over the course of time. So year 1, year 2, year 3, year 4, macroeconomic conditions can change. And your long-term success will rely on your ability to change with macroeconomic conditions. So, for example, if you read Jack Schwager's book on how to analyze commodity trading advisors to make investment decisions, because that's what he did before he was a famous author. He actually just analyzed trading history and track records from professional traders. I've read those books. And here's what he said. You find a trader that's had 4 years in a row of great returns. Don't invest. Think about that. If you find an investor, a professional investor, that's done well for 4 years in a row, don't invest. Because the best years are over. And you're going to get mediocre returns based on what you thought, or maybe even losses. And the reason for it is they made a decision on a macro. So like me, where I said, boom, I'm going to be short the US dollar for 5 years. Now, what tends to happen is you get psychologically married to that idea versus being a decent trader. And the macro forces change, but you do not change. And by the 5th, 6th, and 7th year, you're not even close to what you were in the first 4 years. And in fact, you're probably losing money. That's typical. I'm not training you to be typical. This is why I spend so much time on fundamentals, because you will recognize fundamentally things are changing in the macroeconomic environment, and you will adjust accordingly. So now the key to success is just how many years you're trading. And the more you trade, slowly but surely, your assets under management are going to grow and grow and grow. So 15 years from now, for example, you'll have your trading account, which is growing at whatever this is per year, okay? Plus, because you're sharing this consistency with people, your assets under management will go up from your customers. So this one you keep 100% of your profits. This one you're collecting 20% of your profits, 80% go back to your clients, and you're living off of this. And this is going to buy you a town in South Africa, and you put in good schools and good drinking water and reliable electricity, and you put in parks. And every third block, a statue of yourself smiling. Welcome to Wayneville, South Africa. I am the mayor, the governor, the emperor, the king. Okay? But make it a beautiful place. Make it a better place for the rest of the world. Okay? Yeah. And the taxi driver. Yeah. I Uber too. Okay? So, can you do 2, 3, 1, 4, 6, 1, 1, 2, 7, 4, 8, 3? Can you achieve a year like this? Is that achievable? Or is that a pie in the sky? Nobody can do that. Wayne, that's ridiculous. How do you stay stoic? Well, you stay stoic because you have a plan. Okay? My plan is 300 years. I have a 300-year plan. Okay? Plus, I like doing what I do. So that's important, isn't it? Right? I like what I do. So let it be written, so let it be done. Jamie says, I almost did that last year, but trading mini lots. Can you? Okay, so you're saying, okay, it's not much money. So let's do this. Let's look at this. So we'll start tiny. Let's do this. What was this? Hang on. I can get rid of that for a second. Okay, calculator. Bring it back. I can't probably do. This is going to complicate it. All right, let's do this. Now I have to take a screenshot, I think. No, this one. Clip to clipboard, save. I don't want to save it. I just want to look at it. All right, I'm going to do the other one. Snip. I'm going to snip it. It just makes more sense. All right, snip it. Hang on. Let's see if we can do this. Okay, cool. All right, so let's do this. Come on, get over there. Come on now. Cool. 2 plus 3 plus 1 plus 4 plus 6 plus 1 plus 1 plus 2 plus 7 plus 4 plus 8 plus 3 equals, right? Divide that by 12. 3.5% per month. Okay? Which is what? That is 3 is about 50%, right? What is that, about 58% a year? Is that about right? Let's say it's 50% a year. It's definitely 50% a year, compounded. Okay? So you start year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, $1,000 So, oh, you have to do the year 0. That's right. So let's get rid of this. Okay, this is cash flow, by the way. You just do this on Excel spreadsheet. It's not a problem. So year 0, $1,000. Okay, 1,500. Okay, now what? Okay. Oh, this is a 7, right? So this gets all weird. Add as you go. Yeah. Well, it's just, I'm going to run it down a little quickly. So I'm going to throw out some guesses. So I'm going to make this 2,200. I'm going to make this 3,000. I'm going to make this 4,500. Okay. Now it's getting big, right? So 2,222. So we'll make this, this is closer to 7,000. We'll make this 10,000. We'll make this 15,000. And then we get back to that, right? Somewhere there's a problem. I understand that. So you're going to turn $1,000 into 30,000. Okay. Okay. Now do it another 10 years. 45, 60. Right, so this is basically 1,000, 2,000, 4,000. I could probably rough this even better. This is probably closer to 8, 16, 32. This is probably closer to 32, but it's about, okay? So every 2 years you're doubling is another way of looking at it, maybe. 60, right? So what is this? 11, 13, 15, 120, 17, 240, 19 years, so $500,000. Okay. So in less than 20 years, you can save $500,000. Okay? Which means about 21 years, you can have $1 million. Thing is, people don't do it. Just people don't do it. You can. Yeah, no, you start investing. Right? So that's why you need a side hustle. Because the worst thing you can do, right? The worst thing you can do is spend it. The absolute worst thing you can do is spend it. Yeah, Kale knows what he's doing, like, right? So yeah, so I get it, Kale. The thing is, you have to have a side hustle and do this. Well, so, right? So one thing that gets in the way is you buy things. But I don't spend money in my retirement account. Do you understand that? I can't. I'll have to pay taxes. So I have money growing and 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 growing. I did extremely well in the stock market this year. Crazy. I also own a home that's gone up and up and up and up and up and up and up in value. Okay? Cool. I can't spend the equity in my house. I can't spend the equity in my retirement accounts. Right? I have 2 retirement accounts. Okay? So this is what rich people do. They don't spend their money. The only time you spend money, by the way, spending money is C. So I have to do it this way. C, consumption. Consumption is stupid. What you need is I. Okay, what you need is I, investment. So you will only exchange your money for cash flow. Okay? You can lend South Africa $1 million a year, and they will, right, give you 8.5% back. $85,000 a year will go to your pocket. And at the end of 10 years, they will give you your $1 million back. Okay? So let's take a look at that. Clear. 85,000. Now it's fixed. It doesn't compound. Times 10. Plus you get your $1 million back at the end of it. It only took you 10 years and you did nothing. You had to wait 10 years. Oh, you got $85,000 a year. You can spend that. Okay? Now, if you spend your $85,000 per year into something that also produced an income, so you take your $85,000 per year and then you give that to Mexico. And they pay you what would it be? Okay. Okay. They pay you $27,600 in 10 years from the $85,000. Wait, that doesn't work out because you'd be doing it annually. But anyways, I think you're kind of maybe getting the point. You exchange cash for cash flow. Cash is stupid. Cash should be converted into cash flow. The movement of money, the growth of money over time. I'm showing you how to do that in Forex. And then you're like, well, Wayne, I'm going to spend it. Don't spend it. So your side hustle should be managing other people's money. Spend that money. But never spend that cash. And grow it and grow it and grow it. And then it'll get huge. Then you'll say, well, what you can do is convert that cash now into another cash flow like real estate. Collecting rent every month. Awesome. Or convert it into bonds or convert it into the stock market. You say, I analyzed this. I think there was an economic business cycle reset in March and April. So the stock market's going to rally for another 5 or 6 or 7 years. So you take a bunch of money out of your trading account and you put it into an investment account, ideally tax-free, and off you go. Right? So I max out mine, for example, $3,333.33 a month goes into my business retirement account because I don't have to pay taxes on it. So it's like I never earned that money. Every month. Okay? Just to avoid taxes. And when I retire, it's going to be worth $2 million. And it's just my tax strategy. Now, I have to pay taxes when I withdraw it. I can start withdrawing when I'm, 65 and a half? And then I'm forced to take it at 72. At some point, I will have to pay taxes, but right now I'm avoiding paying taxes. And I stuff it in the stock market. It just goes up 8% a year. And when I'm ready to retire, it's millions of dollars. And I didn't do anything. But I have to defer my pleasure now. See, I could take that and get myself a car. I drive a Yamaha golf cart. Now, my wife has a nice vehicle and stuff, so we're not that poor. But the thing is, I've been driving an electric vehicle for years and years and years and years. Before Tesla, I had a Yamaha. Okay. And by the way, it's kick ass. It's got the speed chip. I upgraded the electric motor. I got super big mag wheels, but with little thin racing tires. Right. I have two JBL speakers built into it with Bluetooth. Boom, chalaka-laka, boom. Right. Beautiful custom paint job. It's gorgeous. Got nice vinyl seats with the colors matches the two, right? Black and red matching the beautiful black roof. It's all sweet. Why would I do something like that? Because it's a dumb use of money. Now, my family and I, we use it. Okay, so there's some utility. But how much money does my golf cart make me? None. And if I'm spending $1,000 a month on a BMW, how much money does that make me? I lose $12,000 a month, but or $12,000 a year. Over the course of 20 years, if I hadn't invested that money, it'd be $1 million. How many people here would like to pay $1 million for a BMW X7? They're nice, by the way. Oh, they nice. How many people would spend $1 million? You're like, what do you mean $1 million? Well, the $1,000 a month you could have invested for 20 years, and it would be worth $1 million. So why the hell would I buy one? Stupid. Dumb use of money. I'd rather buy cash flow. You understand that? I want to know that I'm not giving up $1,000. I'm giving up a car. I'm making $1 million. On the side, a side hustle. And when I'm an old man and they force me to spend the money, what will I do? I'll probably buy real estate. Commercial real estate. Do you know why? Because the day I die, all those assets will be transferred to my heirs tax-free. They're like, we're sorry, really sorry about your dad being dead and all. But guess what? Here's $20 million in real estate, tax-free. It's yours. If I had $20 million in the bank, they're going to take half of it right away, maybe even 60%. Boom. Sorry about your dad. By the way, we're taking $14 million away from you. You're like, what the hell? Okay? Cash flow, guys, cash flow. That's what we do. I tried to explain today the cash flow of bonds and how that impacts import-export data in GDP and how that impacts the value of a currency. That we're part of the fixed income world. The foreign exchange, okay, market is directly or highly influenced, but directly related to fixed income. So the first thing you need to do is fix your income. Grow your net worth, and then take that stupid cash and don't convert it into a giant TV. Netflix won't make you smarter. Buy yourself a trading rig and write it off in your taxes. You spent the money, you have an asset. Sure, it's going to depreciate like crazy, but the thing is you were never taxed on it. You never made that money anyways. And then grow. And then take that cash and convert that into more cash flow. And you can do it through tax strategies like I'm doing. And then you can do it through investing, which I'm also doing. And then you can buy other assets with income, which is another form of diversification. But when you die, you should have 28 sources of income. And somebody says to you, what do you do for a living? You're like, I make money. Wait, you never had a job? Oh, I worked, but not for money. Okay? That's when your Lambo is free. That's right. Okay? People forget it. That we have all the wrong dreams. We have all the wrong dreams. And I think it's just education, right? We just don't know. Money is weird. We don't think about it correctly. Everything you want in life should be free because you exchange the value you create for the things that you want. But you have to ask yourself when you wake up in the morning, are you going to create any value? For most people, they go to work and they make somebody else rich, or at least richer than they are. And for some reason, that person is always an a-hole. Okay? Exactly, Daniel. So I hope I've created value today. I appreciate you in my life. I appreciate you on my team. I'm doing the live trading group today at 2 p.m. So if you want to be a part of that team, the first thing you need to do is go to fxbootcamp.com, pay money to take the training courses, and then it'll upsell you to a $99 a month membership. So you can work with me at least once a week, but I think I'm going to bump that up to 2 or 3 times a week early in 2021. Plenty of opportunities for you to learn. Okay? Right on. Thank you to Traders Way for being part of our community. If you're going to be a success, you need a broker that you can trust, tradersway.com. And with that being said, let me turn there we go. Peace on earth. May the pips be with you. May our profits be above average. Today's a Thursday. Yeah, so I'll see you tomorrow. Cheers.